Hi, my name is William Liu. I'm a senior analyst on the WAM Global Fund.
And I'm Will Thompson, an analyst as well. We're here in New York and we thought we'd give you a live update of what's happening. It's Friday afternoon here and the market is, just looking at the screens, it was down 5%, it's rallying a little bit. And we thought we'd just give you an update of what we're seeing on the ground.
Yes, clearly tariffs has been hugely topical with the announcement on April 2nd with Trump implementing all these tariffs across various different countries to varying different levels. We wanted to give you a little bit of an update in terms of how we're positioned and where are the opportunities that we're seeing as well. So maybe we could start off with just the broader impact of the tariffs. I guess the supply chain is going to be the key thing that we're looking at from a bottoms-up perspective. We've been looking in the portfolio for anything with Southeast Asian exposure, anything at risk of tariffs. And the fortunate thing for us is we've preempted this even pre the US election in November 2024. So this wasn't completely unexpected, but it's arguably a little bit worse than what the market anticipated. And we've subsequently seen this big share price move. In terms of what the response is going to be, I think that's going to be the next catalyst, Will. If we look at what China has done, they've reciprocated 34% tariffs on US imports. But then other nations such as Cambodia, which is probably less important, but at the same time, they've shown a willingness to come to the table and negotiate. So we're really keeping an eye on how each of the different nations respond to the US tariffs, and that's going to be the key catalyst moving on because the tariffs have been set, the market has responded. We'll see whether this is a negotiating tactic, how they will get implemented, and we'll see what the management decisions will be made on the back of these tariffs.
I think the interesting thing, just like watching the market today, is that we saw Cambodia a couple of hours ago come and sort of say that they're going to negotiate with Trump, and then you've seen Nike and Lululemon and all those more consumer-related stocks with supply chain based in those Southeast Asian countries rally from yesterday. And I think yesterday we saw it was like a shoot first and ask questions later response. Whereas today, especially this morning in the market, it felt like a bit more of a capitulation and people are just selling just for no reason. And I think it's hard. I think some really good context was last week. I was in London, and the week before we've probably seen 200 companies in the past 3 weeks, and uncertainty is the theme. You chat to these CEOs and CFOs, and they're trying to make a decision, and it's very difficult to make a decision about your business when you're not sure what your cost base and how your supply chain is going to look. So now they've got a little bit more clarity from Trump. It might help them make their decisions, but then again, there are negotiating pieces. So if you're a supplier like Nike, are you going to bring your shoe manufacturing back to the US? That's probably questionable. So they're trying to work out what they're trying to do. And from a portfolio perspective, that's what we're trying to work out. What's going to happen from this point onwards? And you've got to really think forward, not to what's happening today. It's probably what's going to happen in the back half of the year and how the economy is going to look in that period.
Exactly, and there's no denying things are slowing down a little bit. Like when in our management meetings, like there's a little bit of a pause, and I think this is a function of, hey, we didn't know what the tariffs are going to be. We don't know how to make decisions. We still almost don't know what the tariffs will ultimately end up being. So you're seeing that in the economic data with the PMIs, etc. There's been a sort of pause in the first quarter, so we're really interested in sort of seeing how that plays out.
Yeah, and I think the exciting part for us as analysts is all the companies we liked 6 weeks ago are 20 to 30% cheaper. And you really have to think about that sometimes, like what is actually being priced into this market? Because yes, this stock might be affected by the tariffs, but you're getting it at a valuation that you've never seen before. Like, the last 3 days have been as bad as we've seen since COVID, and we all know what that opportunity was to buy stocks. I think we all look back and go, geez, I wish I'd bought more of XYZ company at that point, and that's what we have to do right now. Which businesses do we think are high quality enough, and we've got a valuation support that despite what happens with tariffs, we can be comfortable buying it because we've got to think they've got a good management team, they've got a good business underlying, the customers will be resilient and strong. And so that's the exciting thing being here in New York for Will and I, is like we're actually on the ground looking at these businesses and trying to catch up with management teams as it's happening.
Exactly, and maybe to give our investors an update from the portfolio, we've been telling our investors we've been worried about tariffs for a long time, leading up to the election, not just leading up to the April 2nd day. So we've really positioned our portfolio away from those companies with supply chain risks, such as the Nikes, Lululemons of the world. So if we look across our portfolio, we have very little direct exposure to tariffs. Obviously, there's a second and third order exposure with if the economy slows down, a lot of companies are going to be affected. However, when we think about the portfolio, we've been quite satisfied in terms of where our portfolio positions are going, where the exposures are in terms of customers, supply chain, and we've really done the bottoms up work ahead of time leading up to April 2nd, where we're in a position now where, hey, maybe some of these companies that are getting sold off 10, 15, 20%, they become really interesting hunting opportunities for us. And once we get clarity on what the management teams have decided, once we have valuation support, then we can really stick to our process where we're looking for undervalued growth companies with a catalyst. And so it's tough. It's a tough market for everyone. Like when markets are down 15% from all-time highs, it's not a great feeling. There's a lot of panic. There's a lot of uncertainty in this environment. And it's not a great feeling for anyone. But I think we're relatively comfortable given we've done the work beforehand. And we're here making sure we're staying close to the companies. We're getting across all the risks, and we're trying to find those best companies that fit our process, that we can really come out the other side and deliver strong returns for our shareholders.
I think you got to make the most of the volatility in a crisis in order to you get rewarded for it if you can make the right decisions when everyone else is a little bit scared, and there's as Jeff and everyone has always said, when there's blood on the streets, that's when you need to go and try to find some really good quality investments.
Yeah. And like I wanted to give an example of a portfolio position that we own has actually done better in this environment. So one of our top 20 positions in the WAM global portfolio is Market Access. They're the leading operator of electronic marketplaces for corporate bonds. So within the corporate bond market, a lot of the trading is done from voice to voice. I'll call a broker up, we'll negotiate a price, it'll be settled quite manually. There's no reason that should be the case. So we believe that corporate bond activity will ultimately move electronic, and that is already happening, and market access will be a big beneficiary of that. The other part of it is when there is this big macroeconomic debate, where there's fear in the markets, when there's volatility, when there's people debating what the long-term interest rates are going to be, that's great for volumes, and that's the key driver of earnings for market access, because people are looking for price transparency, people are looking for liquidity, people are looking for the right place to trade, and market access solves a lot of those problems. So what we've seen with that business, it's actually outperformed in this environment. It's one of the probably very few names that are actually trading up over the last few days. And they're really incredibly well set up. It's undervalued, there's clearly a secular growth opportunity, and their immediate catalyst is this volatility that we're seeing, which is driving volumes, and that will ultimately drive earnings growth in the shorter, medium and long term. So it's an example of name that we own. That's like one of the great things about being active investors. We can find these opportunities that can do well in different market environments. And as a theme across the broader portfolio, we've really been looking at names that can navigate through this volatility. They have strong balance sheets. They're not at existential risk from these tariffs. We're looking at those types of companies which have a good runway of earnings growth, which will ultimately deliver strong returns for our investors.
So I guess that's really it. That's the update we wanted to give you, and it's Friday afternoon here, so who knows what will happen over the weekend with our friend Donald Trump and what he's planning. I think he's at the Live Golf right now, so who knows what's going to happen by the time it gets to Sunday afternoon. And we'll see. It's minute by minute at the moment, but rest assured, we're making the most of this opportunity.